All right, let's talk about something that's making huge waves in Middle Eastern finance. The UAE just rolled out a brand new financial law. And believe me, it's poised to change, well, pretty much everything, for banks, for fintech startups, and even for you and me as consumers. So, picture this. You're a bank manager sitting in your high-rise office in Dubai, and a news alert hits your phone. What's your first thought? Is it, more red tape, right? Or is this a golden ticket? Is this the moment the UAE really steps up to lead the digital banking revolution? That's the big question on everyone's mind, and today we're going to unpack it.
First things first, let's talk about the sheer scale of what we're dealing with. The numbers are just staggering. As of early 2025, total banking assets in the UAE rocketed to 4.75 trillion dirhams. Now, to put that into perspective, that's over 1.2 times trillion US dollars. So yeah, the stakes here, they couldn't be any higher.
And the speed of this change, it's just incredible. In only the first 5 months of 2025, banks in the UAE processed $2.6 trillion in digital transfers. That's not just growth, it's a full-blown digital explosion.
This boom isn't just happening at the corporate level, it's hitting Main Street too. We've seen a massive 55% jump year on year in consumer loans. People are borrowing and spending, which is fantastic for the economy, but it's also exactly why the country needed a new, modern rulebook to keep everything on track.
So, here it is, the star of our show, Federal Decree Law Number 6 of 2025. It officially went live on September 16th, and its mission is actually pretty straightforward: to clean up all the old rules, make the UAE even more competitive on the world stage, and build a financial system that's both safer and way more innovative.
Okay, so first up, let's look at who's got the new muscle behind all these regulations. The law gives a whole lot more power to the Central Bank of the UAE. You'll hear me call it the CBUAE.
And this is a really big deal structurally. You see, before this, banking and insurance kind of lived in their own separate worlds with different rulebooks. Well, not anymore. The new law brings them both under one roof, the central banks, creating a single, unified framework. For big financial institutions, this means less red tape and a lot more clarity.
And when you put the old and new side by side, the difference is just massive. Check this out. The maximum fine for breaking the rules, it's jumped from 200 million dirhams all the way up to a cool 1 billion. Oversight, like we said, is now unified, and maybe most importantly, the central bank is shifting from just reacting to problems to proactively getting ahead of risks before they even turn into crises.
So how are they going to use these new powers? Well, it's kind of like a 3-step playbook. Step 1, early warnings. Banks now have to report any significant risks immediately. If things get dicey, the CBUAE moves to Step 2, crisis management, where they can actually step in and appoint administrators. And if it comes to it, Step 3 is guided resolution, where they'll manage everything from a bailout to an orderly shutdown.
But this law isn't all about playing defense and managing risk. It's also a huge offensive move. It's basically a massive green light for digital innovation and the entire fintech world.
And here's where it gets really exciting. For the very first time, the law is creating official licenses for a whole wave of new technologies. We're talking open finance, which lets different banks and apps share data securely. It's covering payments with virtual assets, which, opens the door for regulated crypto. And it's bringing things like digital wallets and even AI-powered lending right under the central bank's official watch.
Now, with all this incredible growth and innovation, you've got to protect the consumer, right? I mean, gross lending is up over 10% year on year, and retail credit is just soaring at over 18%. This new law is designed to make sure all this growth is actually sustainable and safe for everybody involved.
So how does it do that? With some really strong protections. Banks now have to send out mandatory fraud alerts. They're also on the hook to make sure banking services are accessible to everyone. And a new unified system called Sanadoc is being created. Think of it as a one-stop shop to handle customer complaints quickly and fairly.
Okay, so we've covered the central bank's new powers and all the exciting digital opportunities. Now, let's get down to brass tacks. What does this mean for compliance? This brings us to the billion dirham question, literally.
Listen up, because the clock is officially ticking. The law kicked in this September, but the government gave everyone a critical 1-year grace period. That means financial firms have until September 2026 to get all their systems, their policies, and their day-to-day operations totally in line with these new rules.
And if they don't, well, here's that billion dirham number again. The new maximum fine for non-compliance is 1 billion dirhams. That is a number that is absolutely designed to make sure every single institution is paying very close attention.
So what should banks be doing right now? This table breaks it down nicely. For starters, the time you have to tell customers about a data breach, it's shrinking from 72 hours down to just 48. Having fraud prevention tech is no longer a nice-to-have, it's mandatory. There's a whole new dedicated committee just for handling appeals. And for the first time ever, sustainable financing isn't just encouraged, it's mandated.
So, with all that said, how do you turn what feels like a regulatory headache into a genuine strategic advantage? Let's map out a path forward.
Here's the most important thing to remember. This isn't just about avoiding huge fines. A financial market that's stable, transparent, and really well regulated, that's incredibly attractive. It pulls in foreign investment, it builds deep, lasting trust with customers, and at the end of the day, it solidifies the UAE's spot as a top-tier global financial hub.
So here's your action plan, your strategic next steps. Number 1, get a full compliance audit done immediately to see where you stand. Number 2, start putting money in the budget for the new tech you're going to need. 3, start looking for smart fintechs to partner with to take advantage of these new licenses. And finally, start shifting your lending focus towards sustainable and ESG-friendly projects.
Which brings us right back to where we started. Now that we've gone through the details, what's your take? Is this new law just more annoying red tape to deal with? Or is it the golden ticket for the UAE to not just play in the big leagues, but to actually lead the next global financial revolution? I guess the answer really depends on how everyone decides to play their cards.